Hi viewers, welcome to my channel Option Trading Ki Duniya. So in this episode, I am coming up with another important tool. So that is VWAP, Value Weighted Average Price. From my 15 years of stock market experience, I have found VWAP as a tool very useful in day trading. This tool is powerful for a day trader, and this tool is specially meant for the purpose of day trading. So let me proceed with the conceptual part first, and then I'll proceed with showing in a real screen how VWAP can be used as a powerful tool. So you can earn a lot of money using VWAP tool. So let me proceed. So what is VWAP? VWAP works on the principle of averaging the traded price in terms of volume traded. So what do you mean? It simply means that you are using price along with volume. So you are giving enough weightage for the volume along with the price. So therefore it becomes very important for mutual fund houses to do VWAP trading. So let me explain you how mutual funds use this tool. But before that, let me explain you how VWAP is calculated. So from the screen you can see a minutes data. So 2:30 high low closing price is given. Then again you can see, so let me draw and show you. So you can see at 2:30 high, low, close and volume is given. Then each minute followed by that 2:31, 2:32, 2:33, 2:34, 2:35. Each minute the data is taken. So VWAP can be calculated on a minutes basis, 5 minutes basis, 15 minutes basis, and usually VWAP calculation is valuable only during the day. So it is a tool meant for day trading. Now, how calculation is being done? So let me proceed further. So how do you calculate? Now, typical price, it's the average price of high, low and close. So just now we studied high, low and closing price. So typical price is average, high, low, closing divided by 3. Then we have got volume price. We multiply this typical price. We multiply typical price with volume. Volume into typical price. Then comes total volume price. So we are doing cumulation. I will show in the next slide how we are doing. So cumulation. So all volume price is added over a period of time. So then we take volume and we cumulate. Each minute's volume is added. Then finally we get the tool VWAP, that is total volume price we divide by total volume. So there is a illustration in the next slide. So I'll go to the next slide to show you the illustration. So this is how VWAP is calculated. For the same data, what we saw at 2:30, 2:31, 32. So maybe for 5 to 6 minutes data is there. So typical price is the average. So these 3 divided by 3. Then we multiply this typical price with volume. Then we get volume price. So over a period of time, cumulative. Cumulative means we add this, we get this. Then we add this, we get this. Then we add this and we get this. We add this and we get this. So cumulatively we get the total volume price. Then we divide each one. So this particular part is divided with the volume. So cumulatively it is done. So we have got the VWAP for each minute, and whatever you see a line on the chart, it is nothing but the averaging of VWAP. Okay, so let us proceed further to show you that line later on. Now we come to the most important part. Yeah, we have to strike this to make more money in the markets. So VWAP. So it's an intraday indicator. We basically don't use VWAP in the morning first hour, that is from 9:15 to till 10:15, because in the morning first hour we have to avoid using VWAP because there is a trading gap between the previous day and this day. Because of so much data, so much news, VWAP cannot be used in the morning first half an hour to 1 hour trade. So VWAP is an average. So it's a lagging indicator. You get to know it only after the current market price passes. So it's always better that you use another tool to get confirmation on the trade. Maybe moving average, convergence and divergence, MACD can be used along with VWAP. So now let me come to the most crucial point here. So VWAP can be used for two important reasons. To get to know the direction of the market, in which direction the market is moving. Yeah. So if the current price is below VWAP, I will show you in the chart, then intraday trend is down. The opposite of this is, if the current price is above VWAP, then the current opinion of the market is trending higher, going upwards. If the VWAP is lying between high and low, high price of the day and low price of the day, then market is very, very volatile, so moving from high to low. So if you intend to short a stock, so what is shorting a stock? You want to sell the stock at a particular point. You are expecting the stock to come down. Then the candle formed should be convincingly below the VWAP. Similarly, if you want to ride is if you are expecting the stock to go upwards. Yeah, if the stock or the candle is convincingly closing above the VWAP, then you can go longer. Okay, so I will show this how you can do it on the trading charts. So these are the important things we learn from VWAP. So let me close this slide here, and I am coming to the most important part. So let me show you. So how to put VWAP as a tool? So I already put it. You can go to studies here. I am using a Zerodha's guide tool. So you can put their studies. So I have put their VWAP. I will remove it and show you. So I will remove the tool. Yeah. So I will search in studies and I will type VWAP. Yeah, VWAP. So in VWAP, so this is the line. I will draw the line. So this is the line. So this is the VWAP line. So VWAP. So you need not to calculate, only calculations typically I showed you to understand what is VWAP. Volume weighted average price. So let me remove that part. And I have used another tool there, MACD. In my next presentation I will show you how you can use MACD. I will explain it very clearly, yeah, using all the concepts. So now just let me show you MACD. So go to studies here. I'll remove it. So studies here. So MACD I have already put. So once again I will show you how MACD can be used. MACD. So first one I am selecting. So MACD tool is there here below. Yeah. So here volume also is there. So let me remove volume so that there is no confusion. Okay. So now MACD is below here. So I am putting it on the top. See here, this is MACD. So I am bringing it below. So now, how VWAP you are going to use? Now let me draw it. Yeah. So VWAP. So how to trade using VWAP? So this is the VWAP line. So VWAP is in red color. So this is VWAP. So if on a particular time, so this is one. So VWAP, this particular green candle is convincingly closing above the VWAP. So if it is closing above VWAP, so here you can take trade, buy, and you can wait. So you can write and you can sell it somewhere here. So I am showing you NTPC share. So somewhere when you have convincingly closing of VWAP, yeah, above, and it is always important that you should consider 5-minute time frame. You can use 5 minutes, you can use 15 minutes, yeah, and it is always better that you use shorter time frame, 5 minutes, 15-minute candle. So here 5-minute candle is convincingly closing, and there is another level here. So you can see somewhere here also you can take a trade. This red candle is convincingly closing below the VWAP. So below the VWAP. So you can take a short trade here, short sell, and you can ride this and somewhere close the trade here. So in VWAP what we can study is, it is only used for the shorter time frame. You can see here two opportunities are there, 1, 2, closing it here. So one opportunity here, and you can use a stop loss. Always use a candle below. So this you can put it as stop loss. So suppose if you are trading it here, you can put this as the stop loss. So this particular tip, yeah, and you can ride the wave, you can book profit here. So this is how, so two opportunities you. So one opportunity is enough to make 3 to 4% in trade. So now here down, how to confirm the trade? So this is the point I said earlier. So MACD we have got a black line here. So this is the point of trade I said. So let us go to MACD. Somewhere here, MACD, the black line what you see. Yeah, black line what you see. So I am making it bigger so that you can see it very clearly. Yeah, here. So bring it here. See, I have marked here. So MACD black line here. Yeah. So my point is gone. So yeah. So this is the point. So I have to trade somewhere here. So this is the point of my trade. So trade, I buy. Now here you see MACD. Yeah. So this is the line. MACD line is here. Yeah, in MACD there are 3 points. So this is the MACD line, MACD. So it is the exponential moving average conversion between 12 and 26 days. So don't worry about it. So black is the MACD line. Then we have got a short line. So that is the 9-day exponential moving average line. Okay. So now whenever there are many points here to note, if the MACD line is cutting the short term line from below, so this black line is cutting the short term line below, so it is a time wherein you can take a buy trade. Yeah, and there is a point there. There is a point there. So what is the point? In MACD there is a 0 point. So MACD there is a 0 point at the center. So 0 point here. Yeah. So this is the 0 point. So now there is always a histogram. So in MACD we see a histogram. So this is histogram. So whenever this histogram is below 0, so this is the 0 line somewhere at the center. So when the histogram is below 0, it is considered as bearish. When the histogram is above, it is considered as bullish. Yeah. So now we have to use VWAP. So there are two opportunities. I said here there is one opportunity, here there is one opportunity. We would always use VWAP along with MACD tool to make a confirmation. So buy somewhere here, yeah, confirmation is somewhere here, yeah, and whenever this is histogram, you see, yeah, when the histogram is becoming smaller and smaller in size here, so it's an indication that the market is trending. So where you see from here very small, histogram is small, market is trending. When the histogram is very big, the market is flat. Okay, so understand these both tools. Let me show you another symbol. NTPC I showed. So let me use another symbol. Yeah, I am using, let us take Reliance. Yes, so Reliance chart is there. You see, there are opportunities here. I can mark opportunities. Yeah, so one here, at this candle you can sell. Yeah, and you see somewhere here, there is an indication that the MACD line is cutting the signal line from above. This is point for sell, and here also sell. So I am using this as confirmation. And somewhere here again, so this is a selling signal, and see at this point the MACD line is cutting the signal line. So this is the short term signal line from above, so sell point, and there is one here, yeah, buy. So MACD line is cutting from below. So if it is cutting from below, it is buy sign. So you can buy somewhere here and enjoy, book profit here. So thank you for watching. So in my next slide or next presentation, I'll explain in clear terms MACD, that is moving average, convergence and divergence. So thank you for patiently hearing to me. If you are not subscribed to my option trading ki dunia, please subscribe, like and share. So those who have not seen my earlier presentations, yeah, please educate yourself, try to learn, do paper trading. Always take the advice of financial advisor or a market expert before trading. Do paper trading first. Try to learn the concept nicely. Then you can, once you have started making profits on paper trade, you can go for real trade. So thank you.